Okay, everybody, we're going to go through the Tuesday, July 16th, 2024, 5 with Fitz email. Let's go right to the email as we speak. So, it says, "Good morning. I suggested a while back that investors had best be buying or they'd be crying, particularly and repeatedly when it comes to big tech. A thought that caused a lot of consternation for many in the stocks are expensive crowd. I hope you did. The melt-up continues. My S&P 500 target of 5751 is increasingly within reach. Here's my playbook. Number one, my desert island stock. I recently sat down with my longtime friend and colleague, the affable, incredibly talented, and super savvy Bill VP Patalon, when he asked me to participate in his desert island stock challenge. As in, what one stock would I buy if I had to go away to a desert island and return years later? I thought you might enjoy our conversation. Meanwhile, Apple continues to fire on all cylinders. By the way, 2 more Wall Street firms have now jumped on board with my assessment months ago that Apple's AI would be a big deal, and B, kick off a massive upgrade cycle. I hope I own enough shares, that is. Keith's investing tip. Most investors don't own enough of the right stocks, which is why they're falling behind at the worst possible moment, particularly the diversifiers. Those who do because they're concentrators are having a radically different experience. For example, the SPY, a popular choice for diversifiers, has returned 102.37% over the past 5 years, which sounds positively fabulous, and is, right up until they figure out that Apple's returned 371.93% over the same time frame. So, see what I mean? I'll be here if you need me. Still not convinced? I get it. I run into this all the time and have for decades. Wall Street has done a super effective job convincing people to spread their money around so that they don't lose, but the world's most successful investors play to win. A very different mindset. Let that sink in. Number 2, a trade idea for the unexpected. If you're expecting the unexpected, AutoNation says that last month's CDK software outage will dent earnings by $1.50 a share when it reports on July 31st. The company says there'll be a one-time charge consisting of guaranteed compensation paid to retain associates, but I have a hard time buying that, pun absolutely intended. My experience is that there's probably still considerable damage in scheduling, ordering, payment, and reporting functions for the simple reason that nothing in today's tech-addled world is one and done. Traders and investors are logically hunting to the downside, but I think the real player is higher because lower interest rates, courtesy of Team Powell, may bring new buyers a run-in. Buying calls or at least leaps could be interesting into earnings or immediately afterward when everybody is distracted. Bullish call spreads could work nicely too, as would selling cash-secured puts. Number 3, past its prime or not. Prime Day is underway. Expectations are for $7.1 billion today and $6.9 billion tomorrow. CNBC's Jim Cramer called Amazon a buy ahead of the time. He's probably right, but I've got bigger, more profitable fish to fry, as the old expression goes. If anything, I'm tempted to buy a few Amazon put skis, bet that the stock goes down, if and when it hits $200, where there is considerable open interest and potentially a lot of pin risk that I can use to my advantage. Number 4, should you jump on the small cap bandwagon? I'm not. The fact that Wall Street is talking up small caps almost guarantees they're anything but a good bet. Peloton comes to mind, among others. There are exceptions, of course, but those are few and far between and usually have extremely compelling investment cases worth your time and the risk that comes with owning them. Palantir, for example. Shares have returned 69.51% over the past 12 months versus the S&P, which has turned in 26.9% over the same time frame. Anybody following along as directed in one bar ahead has had the opportunity to enjoy one heck of a run that, by the way, is just getting started, in my honest opinion. Remember how the game is played. Wall Street's job is to make money by separating you from yours. It's nothing personal, it's their job. That's what they do. The old adage very much applies. If you're thinking you're the smartest person in the room, you're in the wrong room. Number 5. I've never thought I'd see this in Japan. Japan has historically tried to avoid bankruptcy and protect existing jobs at all costs in the name of productivity. Now there is a new and chilling wind blowing, one that I'd never imagined I would see. Japan government ministers are apparently preparing to let zombie businesses fail. As usual, there's a wrinkle. Ministers believing that letting the zombies fail will drive a new wave of acquisitions into more productive and presumably profitable businesses that'll be good for Japan's economy. I'm not so sure that's true. Many of the zombies are 3rd and 4th tier suppliers to the Japanese economic machine, including quite a few mom-and-pop shops making super specialized parts or filling in the gaps that are otherwise unprofitable or wanted by big players. It's a legacy of past glory, not a path to future economic prowess. My point of view, I spent nearly 35 years closely involved in Japan as a businessman, husband, father, and resident, so there are observations I don't make lightly. I hope I'm wrong, but sadly, I don't think I am. They're messing with fire culturally and economically speaking. Bottom line, everything starts with a single decision to make today better than yesterday. What are you waiting for? As always, make it great that you got this, I promise. Keith. End of email. So, in summary, Keith says Apple is the stock you want to buy if you're on a desert island, and just set it and forget it. I could not agree more. With a disproportionate and largest percent share of stocks being in Apple, doesn't let you down year over year. Number two, a trade idea of AutoNation. This is about cash secured puts, spread options, if that's your thing. Prime Day, big numbers. But Keith has not been a big fan of Amazon, and the readers who follow along with Keith should also be wary of Amazon, as noted in recent emails. Number four, the small cap bandwagon, such as Palantir, avoid at all costs, is his logic. I couldn't agree more. The small caps, there's just too many garbage stocks out there that are not even worth your time or money. And then number five, about Japan, yeah, I make the agreement that the government is going to let zombie companies fail and not be maybe bailed out. He's saying that there's going to be mom and pop shops that fill all the gaps for the economy. But I'm not necessarily sure where his stance on this is regarding how much the government should save companies that are failing in the name of keeping everybody employed. So this is maybe a bit more of sort of government intervention. It's an economic position, but having said that, it just doesn't. This is really something that's quite actually esoteric, whether the Japanese government intervenes or doesn't intervene in failing businesses. But it is certainly, as he said, 35 plus years investing, his family and time to Japan. It hits close to home. So we hope that Japan makes the right decision and does support even the most failing businesses, so that everybody can at least stay employed. That would be ideal for Japan. Okay, that sums up today's 5 with Fitz review. Looking forward to providing more in the future.